Hello, everyone, and thank you for tuning in to another episode of Market Talks with Neil. Now, today I have a really special guest. Why is he a special guest? Well, first of all, he's a veteran in the CFD investing trading industry, as well as an accomplished individual and a husband, a father, a family man, which adds up to the equation, in my opinion. And I'm sure a lot of you would share the same. So, with that being said, Fadi, Mr. Fadi Haddad, thank you for coming in.
Thank you, Leo. Thank you for hosting me here. Merci.
My pleasure. Now, as I said, Fadi is an accomplished individual and a professional. So, can you, first of all, before we start, can you give us a couple of things about yourself?
Well, 45 years old, a father, as you said, been around much in the industry since 2010, working officially on market. As from the days that computer and e-commerce started, basically, we've been from the beginners on the market. So, okay, I know I look young for you, but I'm 45 years old. So yeah, it shows. Yeah, I hope it doesn't show, but it shows.
No, you look fine, my man. You look fine. Don't worry about that. So you started from the beginning.
Yeah.
So I don't think, well, actually, there isn't a lot of people in today's world that started from the beginning since the internet came in,
Sure.
online trading, so on and so forth. So with that being said, I want to ask you a few questions, mostly for beginner traders, okay, or people who they're not traders, but they're, swerving with the idea, how would trading be? And what would I gain if I start trading? So, question number one, from somebody watching from home, somebody watching us right now,
Okay.
why should they care about financial markets today?
This is a very good question, and thank you for pointing
Absolutely.
this thing out, basically. If we look at generally life, okay, let's go away from the hard terminologies that people use in this industry and start working on individual cases. Let's consider ourselves normal humans living with a salary or without a salary, who would like one day to go out and open their own business.
Okay.
Somebody
Yeah.
felt financially stable, he would like to go and start his or her own business. Okay?
Yeah.
It's life saving from a salary or a loan from a bank, whatever. They wanted to start their own business. Okay. You have a capital, you have an idea, right? And for sure, you have a revenue expectation, sales, profit, losses, whatever you want to call it, right?
Absolutely.
Let's make it an easier example even for our viewers, right? Let's say that you want to open a market, mini market, whatever.
Convenience store.
Convenience store. This store, basically, you're gonna buy your basic needs from it. Coffee, tea, gum, cigarettes, whatever you want to call it, right?
Yeah.
So, how hard it is to sell a thing that you need, essentially, for living?
I wouldn't say not that hard.
Not that hard, right?
Yeah.
Can you guarantee for me that you are going to be making profit knowing that this shop will be in a neighborhood you are very well known in, which has, let's say, some customers that are attached to you on personal
Loyal.
level? Loyal, right? Can you guarantee that you're going to make profit?
I would like to say yes. I would like to. Okay? Let me rephrase it. Chances are that yes, you will, provided that you got some loyal customers, friendly customers, people that they know you, they trust you, they're gonna come to you. Chances are.
Okay, I disagree with you about this particular idea. Otherwise, everybody in Corona made fortunes when people needed to have their groceries coming into their houses. A lot of people
Good point.
were bankrupt
Oof.
during Corona, right? A lot of people took money from government. Even countries, they stopped, they started only paying life support loans, and giving people some aids in order for them just to get on their feet.
Yeah.
Correct or not?
Absolutely.
I'm talking about individuals and companies even at the same time.
Absolutely, yes.
Good. What I was trying to tell you is if you open a convenience store and you're waiting for customers to come, even if you know the customers, you cannot guarantee that the revenue that's going to come will cover the running costs that you have.
Yeah, that is not arguable because you can't expect somebody to be your client every single day.
Bravo. We have geopolitical problems, natural disasters. We might have some, like any economic problem that can affect people. Vacations, seasonality. You can name it.
Unemployment.
You can name it. Like there are a lot zillion reasons how you might or not be able to make money.
Yeah.
Good.
Absolutely.
As a convenience store.
Yeah, there's always going to be the mishaps.
Good. Let's say that you made a very good return inside your industry. A lot of people came, bought stuff from you,
Okay.
right?
Yeah, which is always good. But
Yeah.
yeah, there is a.
Don't forget you have a running cost. You're
That's
paying,
standard.
that's standard, right?
And there's nothing you can do about it.
You cannot do anything about it, right? So
Yeah.
let's say you own the convenience store, you go in the morning, you open that shop or turn it on, the lights, immediately cost starts to pour, right?
Okay.
Isn't it? That's true.
Just to put the key on the door, the minute you turn it on,
That's it.
the cost is coming in.
True,
Yeah.
true. Now, let's say you make money. You made some profit, after covering the cost, you made some money. Like 90% of the existing businesses that are ongoing for years. How much will that profit be? Percentage-wise, in a year, annually?
Oh, I would say low.
10%, 15%?
You could say that, yeah, maybe 10, 15.
Let's look at Tesla.
Okay, now we're going there.
Yeah, let's look at
Okay.
Tesla because they have a running cost as well, right? They're
Okay.
manufacturing the cars,
Uh-huh.
they're bringing the batteries, they have the innovation, researchers, whatever. After that, you will
Film
be-
production, let's
Yeah.
not forget that.
Yeah, taxation.
Even production that they had to recess back.
Bravo.
I mean, there
Bravo.
is a lot more involved
Bravo.
with these guys. But yeah, they have a lot of losses, let's just say, and expenses, so on
And
and so
also
forth.
high profits. But
Yeah,
in general,
again.
they are balancing them. So you
Yeah.
cannot be expecting to be making a large profit out of the investment in Tesla, right?
Yeah.
As a company.
Yeah.
I'm talking as a company. Same like the convenience store. So in average, people make on private businesses between 9 and 22%, depends on how big is the size of the institution, seasonality, and we spoke about how luxurious is the investment in the product, and so on and so on. If we talk about 22% a year, 20% a year, let's keep it, divided by 12 months,
So you're gonna have like one point something.
let's say 2.
That's too much.
Around
Not
Around
even-
2% a month.
Okay.
You know that by entering, let's say, let's randomly speak about gold scalping every day. You
By the
understand?
way, really quick for some people who
Sure.
don't know, what's gold scalping in a,
Sure.
in a, in
Sure.
a brief way?
Sure, no problem.
Because some of our audience might not know.
That's understood.
Okay.
Scalping basically is entering, executing, and coming out fast from the market. So basically,
In and out.
you target $1, $2,
Mhm.
close and come back and open again,
Yeah.
and so on.
In and out.
Yeah.
Okay.
Now, of course, again, like the opposite way of trading is called, of course, swing
Mhm.
traders.
Yeah,
These are the
for
people who buy and
longer
take
period,
longer
yeah.
period to make larger profit.
Thank you for explaining that.
That's your service. And if we look at scalpers on daily basis, you understand? Immediately, let's say you have a $200 balance. I'm not saying 1 million or something. $200
Not a big
balance.
amount of money.
$100 balance.
Okay.
And you open a 0.01 on gold. Gold trades every day nowadays between $10 to $30 every day. So let's say if the market goes to your direction, you make $10 out of 100 investment.
That's 10%.
That's 10%. That's
Okay.
now the good part. I'm coming with the good part.
Yeah.
Where is the running cost that you're having? Nobody sees that, right?
If I want to be spastic and obnoxious,
Sure.
if I want to be like the annoying jerk in the jar, I would say maybe your electricity, but what if you're not because trading you need a laptop, you need a computer. So maybe you'll need electricity. That's the only thing that can, think of. But what if you trade at the coffee shop? What if you trade on an open Wi-Fi and so on and so forth? What if you just don't even use electricity and you do that through your phone, and usually companies give you a plan that covers unlimited internet, so on and so forth. So not even peanuts, man. I mean, almost nothing.
No, let me give you a better thing. Now we have copy trading. You don't even have to be trading by yourself.
Oh, wait a second. So you're taking this to another level.
No,
Okay.
I'm not saying it regarding. I'm just giving it as an example. If you want to trade these days, there are robotics that are in charge for trading on your behalf, taking the decision based on AI. Now, we're not saying that anything is guaranteed on this market. This market is still a dangerous market.
Of course.
But
the whole of trading and investing carries a lot of risk.
But
let's not forget that.
At the same time, opening a shop or a private business is also very dangerous, because if you have a project and it got bankrupt, or any problem happens all around the world that made you close that business, right? Okay.
Before the year ends,
So
and I can tell you, I'm sorry to cut you off.
Sure.
When I was a kid, my mother wanted to do work. My father said, "Okay, how about you?" Because as a mother, she had to take care of kids and all that. And he just suggested at the time, "Why don't I help you open up a small clothing store so you can sell some clothes? It's something you know how to do, so on and so forth." And they did. And after a year, they decided to shut it down. Now, mind you, after a year, that is when the business was not so satisfactory, that my mother said, not my father, who was actually helping through his salary to maintain that store. There was tiny profit that at the end of it, he would say, "That's not worth it." And then it got a little bit worse. It was just breaking even. And then my father said, "We need to be careful." And my mother came about, because women are smarter than men. Okay, let's not forget. And she said, "No, you know what? Let's shut it down, because at some point now, you're covering some of the costs. We're breaking even now. Maybe less than a year. In a short period of time, you have to put the lock on the kid. That's it. This is it."
Well, this is.
And I'm sharing this based on what you just said.
I already had my own private businesses here and there in different places. You understand? I always had the dilemma about how I can sustain paying all the expenses related to this business, you understand, until I break even and return back my capital. Can you imagine that?
And at the same time, you had a family.
You had a family, you had kids, and when you are aging, you're not returning back young.
Yeah, the energy starts to drain.
Problem. So if you think about it from a rational point of view, I always tell even my closest friends, I never say to people trade. It has to be a decision made by you on personal level to think about your future. Do you see yourself happy with the depreciation that's happening on your currency every day?
That's impossible not to see it.
$3,000 or $5,000 or $6,000 a month that let's say a medium class American or European are making these days, you understand? Value-wise, used to take you around the world in the 70s with the same money. You used to go around it for 3-4 months traveling.
We're talking about 60 years ago, 50 years ago, yeah.
Barely now you are paying your rent and keeping something for the saving. So it's the same
I'm
value.
sorry, but you might not even keep something for saving. I'm sorry to say.
Like getting even stuff, like looking at what's going around all around the world, we understand that money is a paper, based on an economy. You understand that if it's making good, the paper has value. If the economy is not making good, so the paper doesn't have a value. So how do you avoid that? How do you avoid the depreciation that's happening? Make the money work for you.
Warren Buffett, I love this.
Make the money work for you. You understand? It means that if I keep my money, and I'm not saying it, I'm saying it out of friendship, like to all traders all around the world, or people who are interested to listen to this podcast, right?
Yeah.
if you have money, if you put it in the bank, it's a waste of time because
They're
by
just
time-
sitting there, man. They're not doing anything.
Exactly.
It's just the same as putting it in your safe.
The same risk you are taking when you open a business or buy an investment or do whatever, it's the same risk. So instead, try to diversify always. You understand? Try what you have. By the way, trading is, as I said, it's a risky business, right? But all depends on the size of capital and risk management. You get
Tell
it?
us a few things about that.
Sure.
About like, first of all, it's understandable that trading and investing carries a lot of risk. But you know what? I'm sorry, but I want to jump in and say something else.
Always.
You're running a risk every single day by crossing the street, driving to work. For God's sakes, taking a walk down the street, you might miss it. Some idiot might left a banana skin and you step on it and you break your ankle and this and that, and then things can get even worse. So, yeah, but what I'm trying to say is this. If, for whatever the reason, you lost some money in trading, you're not going to lose your life, you're not going to lose your whole savings, okay? And you can always either you come back, or you just say, this is it, maybe not for me, or why I didn't do that well. Because one thing that I've learned in life, every successful individual failed so many times, and they didn't just come back because of ego, they came back saying, why did I fail?
Yes.
And they came back to, you know what, I can name names, but it's gonna be a waste of time. A lot of you know
No.
that a lot of, if not all the individuals failed again and again, but the question that they asked was, why did I fail?
Yes.
I'm not gonna go back just because of ego, just because of who I am. I'm gonna go back and try not to repeat the mistakes that I made.
Bravo.
Okay.
This is the thing people should understand, that they can have a bad apple and die out of poisoning, or get crushed by a car, which is not your problem. You understand? Anything can happen all around the world, which is risky. Going anywhere is risky. Doing everything is risky. But if you take a measured risk, and this is what I'm talking about, measured risk, and invest on the market, returns can be high because you're using leverage. Let me give an example.
So tell us about leverage.
Leverage is it's a multiplier given by companies to make your balance go bigger to buy more with less amount.
So in other words, it's a helping hand.
Of course, it's a tool. By the way, tools given only by financial institutions. You cannot get it anywhere else.
So in other words, you don't just start off, with, let's imagine that you want to play football, right? And you don't just, have a pair of soccer cleats, shorts, shirt, whatever, and a football, and you go in. You get a coach. I wouldn't say a coach. I don't know. Somebody who's right behind you. Trying to. Okay, let's start again from the beginning. Again, no, that's a good thing. Let's start again. So
Why it's happening? I don't understand.
me neither. So let's go again. So tell us your own point of view, or how would you explain it about leverage?
Leverage is an instrumental tool given by financial institutions to increase your capital to buy more with less money, to make things easy.
So in other words, you might start with, let's say, 100, like you said before, but that 100, it's worth a lot more.
Yes.
And the reason behind that, why do companies, why financial institutions do that?
Very good, very good. Now, I can give you more than one scenario, but I'll give you the righteous one.
Okay, great.
Financial institutions, they need to move the money inside the platforms and the world capital market so that they can create demand and supply, or buy and sell,
Yeah,
right?
yeah.
How they can do that with individual having $100 and $200? They cannot do it, right?
No, it's,
So what they do is they pump liquidity inside every trader account to be able to create a real market update.
so in other words, in order to aid themselves, they aid you.
No, the financial institutions, they make the difference between buy and sell price that they present on the platform.
Run this again for people who I understood this.
Let me put it in an example to make the
Yes.
language much easier.
Okay.
Let's say you have $10.
Yeah.
If you go to any investing bank in America and tell them, listen,
There's
I
a
have-
door they're gonna tell you.
Yeah, I'm telling you, I have $10, I want to invest it in something. They'll tell you, know where you can invest it? Go to McDonald's, get something.
Yeah.
That's the best they can give you, right?
Uh-huh.
That this is even if nowadays you cannot even afford it. Anyway, the $10 doesn't make anything, right?
No.
In real life. Now, if you go with a $10 and deposit it in a platform, right?
Uh-huh.
The platform, let's say, I'm just giving an example based on the information given, they give about 1 to 100, 1 to 500, 1 to 600 on gold. It means every dollar you put on gold from your own pocket will equal 100 on buying power on gold.
Yeah.
Right?
Okay.
So let's say you have $10, okay, which is worth nothing, and put it and go on a platform that gives you 1 to 500 on gold.
So.
So now, instead of you trading with $10, you're trading with
500. Well, actually 5,000.
5,000.
Yeah.
Right? So if you trade with 5,000, right, you can get, I'm just giving, of course this is risky, but I'm just saying, you can get 1 ounce of gold with the current price that we have. 1 ounce of gold equals to 4,000, about 4,000.
Almost
50.
Yeah, a
No,
little
now 450, 4,050 today or 50, whatever.
Okay,
It's going
so
around.
let's say 90% of, yeah.
90%. Well, this is what we're saying is risky, but think about $100. You understand? If you spare from it $10 or $20 and you wanted to get gold, you'd be able to buy 2 or 3 ounces of gold.
Yeah.
Now, if the price moves of gold in one day, which is moving about $10 to $30 every day, ups and downs, let's say the price moves by $10 only, you made 10% from the 100 or 100% from the $10 that you already put on that trade.
So in other words, you're saying from one single day, in maybe less than an hour,
Yeah.
because you mentioned scalping in and out really fast, in less than an hour, you can make 10% of that initial investment, which, let's say,
Potentially, maybe.
potentially, yes,
Because
you can
nothing's
make.
gonna-
You're not gonna make, you can make.
Yeah.
So potentially, hypothetically, 10% from one investment, which is practically peanuts, okay?
But why to say peanuts?
Well, $100 in today's day, come on, it's not a big amount of money.
Think about it in a different way.
Okay,
Let's say you had $10,000.
okay,
If you spare 1,000 and put it on gold,
oh,
1,000 multiplied by 500, it would be
so
500,000.
that's $500,000, yeah.
That's half a million.
So
divided by ounces of gold, that's gonna be making around
15.
like 100 ounces or something.
Yeah.
100 ounces of gold, which is one lot, or the lot size, 1 lot size. If the price moves by only $1, you make $100.
Again, in less than an hour,
And maybe in 1 minute.
maybe
If
one,
the price goes $30,
and it moves
you're
20
making
to 50.
$3,000. You get it?
So in other words, from 10%, we jumped up to like 30%.
And why I said 10% in specific, I didn't say 50%. That's the difference
I
between a
want you
gambler.
to tell me that, yeah.
That's the difference between a gambler and a trader. If the market leverage is a very powerful tool, at the same time it's a dangerous tool. If the market goes to your direction with leverage, you're making a big amount of money. If the market goes against you,
Yeah, you're gonna lose.
you're gonna lose everything.
Yeah, but you
But
did mention
If you use a proportion
yes
of
I was
the
gonna-
balance that you have, this is called risk management, and expose it to the market, then the leverage will make sense because you're making bigger than 2 or 3%, which you used to make 2 when you had a convenience store with running costs.
And you still have to pay that cost. So in other words, let's not forget, not in other words, let's add up to that. The running cost is gonna be there and there's nothing you can do. Here-
In private business.
Yeah, even in you know big companies, the cost is still there.
Everywhere.
However, here, the cost only happens if you lose. And it doesn't happen on a higher level than in a private business or in a corporation. Partially from that initial investment.
True.
Which in return, for whatever the reason, mistake, did not read the market well, I don't know, had the bad day of it, we all have bad days.
Geopolitical thing and news.
Unexpected, yeah,
Really?
unexpected things. All of a sudden that happens, you take a small loss, you still have enough to come back, reclaim it, find out what you did wrong, not repeat it.
Don't
I mean,
forget,
you
there
get
are
the
tools.
idea of the recipe.
Don't forget, you have tools inside
Uh-huh.
that make your loss go lower, which is stop loss option.
So in other words, you can actually say right before you start trading, this is how much I'm willing to risk. This is it. That's it. If it happens, I'm done for today, or for this hour or whatever. On to the next one.
I have a question for you.
Oh yeah, sure. Go ahead.
Give me a name of one business in the world that you can control 100% your risk by setting a stop loss.
There is no business like that.
Even marriage doesn't.
That is probably at the top of the even marriage. Cannot.
So yeah.
But there is no business that you can control. There is nothing you can control 100%. Only God can do that.
If you own a shop, if there's a problem that happened to that shop,
You have to tell me.
you will pay the bills and the taxes and it will count and count and count and accumulate if you don't pay them.
Oh, I know.
Meanwhile, if you have a trade of gold and you set your stop loss on $10 against the market, and if it's a stop loss, it's only the $10 that you put over there and that's it. Enjoy your time, go sleep happy.
In other words, let the money do the worrying. If they don't do today, they will do tomorrow, the day after, and the days.
And the good thing, it doesn't contradict with what you're doing in real life. So if you're a doctor and you wanted to open a trade, that doesn't make you close the clinic that you're already running.
Yeah, I'm on the surgery. I'm sorry. Wait until I go trade. I mean, if you die, yeah, things happen.
You can always open the trade, you understand, and wait and put take profit, which is the opposite option of stop loss, where you can target a specific target. If the price goes there, the trade close, take your profit, add it to your balance.
And the end.
The stop loss is totally the opposite. When the price goes against you, it hits the stop loss, the trade stops automatically.
I don't think there is anything more to say on that. So I have a follow-up question.
Sure. Oh,
Obviously, trading can be done at any given time, regardless of the situation, regardless of the geopolitical event. How about now? Why now would be a good time?
I'll tell you. The market, I can name it like I can name it in a better way. Liquidity starts to flow on the market whenever there is a problem.
And right now we have quite a few problems going around.
I'll give you something you might be very interested in. If the world is in peace and everything goes fine, if you go back to the eras that basically people had nothing to do, 60s, 50s, there were not a big problems after the Second World War, right? The size of fortune that people used to make is limited.
Yeah.
Because basically everything looks fine. Nothing there to worry about much.
There's no
Nothing there to
competition.
attract people
Yeah,
to
there's no
take the risk to
competition.
do something.
Yeah.
If you open any business, it's gonna be like kind of blossoming, giving you
Mediocre.
projections.
Yeah.
Everybody's happy. When war happens, or a natural disaster happens,
You have to rebuild.
no, some prices of basic needs, products, currencies fall.
Oh, yeah.
So this might be a chance for you to take it, for swingers like me,
Uh-huh.
take it from lower prices and wait. As a person, are you going to buy gold? Do you prefer, let's rephrase my question. Do you prefer buying gold from the price of 5 or 4,000, or do you prefer to buy it when the price goes down to 1,000?
Absolutely 1,000.
Thank you so much. So, war, and I'm not talking about war only, geopolitical situations, natural disasters, central bank decisions make the prices either go up to high, skyrocketing, like charts,
Unbelievable, unbelievable
or
levels.
to take it down to a level that might be a good entry for you. So, if the price goes high or low, if it goes high, it's a good time to sell.
Yeah, that's when you're gonna make the money, yeah.
And if the price goes low, it's a good time to buy. you're gonna be worried if the price goes in the middle all the time, like the 50s and the 60s, because there is a 50% chance.
You don't know. It's either up or down. But if it's down, there's only about one way up, and if it's up, the next way it's down.
Right. That's
So-
why best money is made. They always say
Whenever there is tension.
disasters.
Whenever there is tension.
Disasters
So
always
it goes
fortune
back.
makers.
It goes back again to the theory. Well, I wouldn't say a theory, but to the fact that after war, or during war, or during a tension, a disaster, something. Okay. As the song goes, after the storm there is sunshine.
Yeah.
So there you go. So the best way right now, okay, it's a good idea to trade. I'm not, okay, let me be clear. I'm not telling you guys after you finish watching
No,
this,
no.
go crazy. Find out a little bit more
Read.
and yeah, read, educate yourself. Individuals, professionals like Fatty would be there to, help you out and give you a lot more information. But right now is a good time to start trading.
I asked you simply, will you buy gold when the price is high,
Oh, no,
or will you
man.
buy it when the price goes down?
No, absolutely when it's cheaper. Absolutely, it's no
Let-
brainer.
Let's say the opposite. Will you sell gold when the price is high or when the price goes
Absolutely,
down?
when the price is high.
Thank you.
Because let's not forget, if I bought it, as you said, when it was low at 1,000, now it's at 5,000, you know what? Yeah, get rid of some.
I was there in 2017 when Bitcoin entered the platforms, right?
Okay.
When I was sitting with my colleagues in that trading room, everybody was like waiting for the entry price, which was 1,273 at that time. We were sitting in the room and everybody was like, what is Bitcoin? What is this? I had even people who say, Bitcoin, it's a scam, man. Forget about it. It's not good. And we discovered that we made a huge, a large number of billionaires, kids. You understand? They're kids. They're 21, 25. Look at the Asian, for example, Asian community who entered Bitcoin, who were in a very good knowledge about in Japan and China,
About
different
digital
places
currency.
about these things. Me myself, I was like, let me check when the price goes a little bit high. Maybe maybe it's gonna just fade from the from the chart.
Yeah, maybe we're
Can you
just gonna
imagine?
be a fling. Yeah.
And nowadays I'm like,
Get a load of this kid now.
we should have thought about it.
Yeah, we should have thought about it. Yeah.
Should have thought about it.
So, based on that, imagine there was a group of people,
Mhm.
beginner traders, they're about to trade. What would you say, or I wouldn't say advice, but more or less guiding point to them before start placing trades?
I always tell everybody, and I'm always saying this out of respect to all the traders all around the world, trading is a very risky business. At the same time, it's a very profitable business.
Yeah.
Okay? I always tell people, respect your capital.
So before placing your trades,
Respect.
do your evaluation, respect your
Risk
capital,
management
don't
is
go
specific.
bananas, don't go crazy.
Don't go crazy. Always take, if you have a capital of 500, okay, it's always advisable to use between 5 and 10% of that in trading. It will give you a good entry to the market. It will give you, if the market goes against you, the leftover of the 90% over of your money will be there to support you until there are corrections on the market. It can help you to make good money. If the market goes into your direction, it can add more trades and make more money. But always be sure that this is the most profitable market in the world, the most profitable business in the world, let's say. Do you think Elon Musk made that money, became the richest man on the planet by selling Tesla cars?
No,
Or his share
of course not.
prices skyrocketing?
He paid attention to his capital.
Bravo,
He didn't just go all out.
bravo.
And that brings me to the final question.
Sure.
As you correctly said, every other person, every other successful trader, entrepreneur, okay, respected their capital, did the good allocation of capital on certain tradings or investments. Now, with that, my follow-up question is, a lot of people, and I'm sure you came across that, think of trading as gambling. I per se don't agree, but I'm not I'm not the guest here. I want to hear your input on that. How would you answer to that? Is trading gambling?
Well, there's a counter. There are more than one way to answer that. Okay, but
By all means, the floor is yours.
let's make it the easy way.
Yeah.
Isn't opening a legit business gambling?
No, people will argue that it's not. It's some guy who's willing to put the hard work, and which, again, I come back and tell them, yeah, man, you might put all the hard work. If it doesn't go in your favor, you're still gonna have to pay your expenses.
Plus running cost until you close the business.
Yeah.
Question.
They're not gonna say, oh, I'm so sorry you don't have any, incoming flow of customers. We're still gonna charge you.
Yeah, you have $100 in a trading account of yours in the market. Okay?
Mm-hmm.
What is the worst case scenario that can happen to you? Lose the $100.
Yeah.
Right?
That's the far-fetched.
The platform or the company will not send these magic hands to strangle you to pay more.
No, of course not.
No, nobody's going to do that, right?
Yeah.
Now,
As a matter of fact, I'm sorry, there is a law about that.
it doesn't allow you.
Yeah,
You
it-
just lose what you have inside your capital.
That's it. Yeah.
Okay. Now, as if you're charging a cell phone with units to call.
Mm-hmm.
When the
When
units,
out of minutes,
when you're
line
out of
drops.
those, yeah, that drops. That's finished.
Yeah,
They
they're
have
gonna
nothing
send you a
else to do.
bill after a month telling you, you know what, you use it. I didn't use it. The line dropped. Yeah.
True. So, speaking about gambling,
Mhm.
what is the difference between gambling and trading? Which is a huge difference.
Oh.
In gambling, you go and you don't know what you're talking about. You're pressing either on a slot machine, sitting down there, pressing, hoping that the jackpot will appear or some money will
Yeah,
come.
you just-
So it's a 50-50, even more to the
Actually, I
losing
would
part.
say
Yeah.
it's 70-30. Okay.
Let's be nice and say 50-50. Okay?
Well, I'm sorry again. It's 70-30. I'm sorry. I'm gonna say that. As a matter of fact, they tell you before you enter the casino.
Yeah.
The house always will win.
Always.
So you know that your chances are.
But
slim.
you still might get that jackpot that makes you happy from $1 investment. So that's no problem. So let's put it this way: you gambled by entering into any kind of gambling or anything related to gambling. You are with the odds or against the odds, playing in and out to make some money.
Yeah.
Markets are not like that. You are studying. You have technical analysis that shows you approximately what's expected to be happening.
Mhm.
There are geopolitical situations happening, giving you news about what's
So
expected
that's
to
the
rise or
fundamental.
fall.
Yeah, the
So
fundamental.
placing yourself will be based on the technical analysis, when to enter to the price entry. You understand? Gives you an entry, a clear entry to get the entry on the market and wait for the price to go to your direction or against it. You understand? Based on what's happening.
Mhm.
Good? So where is the gamble in that? If you are making sure that you respect your capital by investing not all your capital, by investing some part of it, put it on a trade and wait.
So in other words, it's a combination of, first of all, not using all your eggs, as they say, don't put all your eggs in one basket.
Never.
And then from what you're gonna use a part, so if you have 10 eggs, you spread them around 3 baskets, and then maybe you use one from each basket, not all 3 or,
That's
so,
how it works.
So in other words, it's, if you plan accordingly, chances that you will have success. And if you find out that, not if you find out, if you discover a way to repeat that a lot more times, you're gonna lose, obviously. You can never always win, because otherwise, everybody would have been trading. You're gonna lose, but like I said, if you do a calculated plan, a well-thought-out plan,
Calculated risk.
yes.
That's the word.
Okay, which again brings me to another question. I'm sorry I'm breaking your charge,
No problem.
but with that, because of what we just said, and I've noticed a lot of young traders make mistakes. What would you say is the biggest mistake traders make, especially newbies, young ones?
Newbies.
Even
those ones.
even experienced ones.
I always say the same word to every single person. Don't take leverage for granted.
So respect your tools.
Most of the traders, they think that they know the market very well. If you lose, take a break, revise your plan, get back again on a good entry price, and respect your capital by using part of it in that trade. If you continue to do that, if you study where you fell, you're gonna rise and you're gonna make wonders. I believe in this market, it's a chance for everybody. It's a chance for every single person to go and make a buck clean without having headache. Even he can diversify. You can always work 5 jobs, or 3 jobs, or 2 jobs. Physically, it's gonna hurt you. You understand?
More than you know.
Right? But you can always make a passive income from trading on the side, opening a trader, being part of a group, even on copy trading. It can be always a part in the trading, whether you want to be involved on personal level or just copy or do whatever you want. There are a million ways. There are robotics. There are algorithms, algo trade, like robots to do algo trading for you.
So I want to add up on this.
Sure.
So in other words, you go trade. You start off slowly.
Yeah.
You do it on the side, okay? However, that side hustle, let's call it for now hustle, that side hustle cannot just be done with one way, as you said. So there is individual trading, self-trading. There is group trading.
Sure.
There is algorithmic trading, like you said. There is robotic trading from AI. There is copy trading, having somebody else do your trades for you, you know.
Not only this, you can always be a part of the company that, if you're happy with the platform, and there are people watching you do whatever you want. If you created a community, you can always be also a partner with the company as an IB to take part of the rebate passively from the trades that is done by you and your group.
So it doesn't just stop only on trading.
There are a
It
million
can
ways to
go
make money
out
from the
there.
market. There are only millionaires. Look at the biggest millionaires all around the world right now. Do you think none of them, like, do you think any one of them who's not doing any trade somewhere? Directly or indirectly. So basically, it's either you trade by yourself with the market, or you give your money to an institution to trade on your behalf. Banks, whatever.
No, of course.
Everybody's doing this. Why? Why do they do this? Do they lack the knowledge? Are they, let's say, gamblers?
No, they're not gamblers. That's a definite no.
They know that money is always worth it when it's on the leash, off the leash. Sorry,
Yeah.
I said on the off the leash.
As a matter of fact, based on what you just said, quite a lot, if not all of professional athletes, and I've seen Shaquille O'Neal saying that. You know, funny, because today I saw one of my favorite baseball players, Alexander Rodriguez.
Yes,
Right now, that guy is the most successful baseball, actually, let me put it, the wealthiest retired baseball player. And you know how he made his money grow for him? And what he does right now? He has an investment trading company, the A-Rod Group.
Yeah.
And you know what he does? He has a small fraction of that into some kind of baseball, basketball, female basketball, which is growing, okay? He also saw the opportunity on that. And the rest of it, it's on private funds,
shares,
yes,
bonds.
all that. And like him, there's others. There is quite a lot of you. Shaquille O'Neal said quite in a lot of interviews, podcasts, he said, I saw this, I liked it, I went over there and I bluntly said, I like you guys, I want to invest. Just like that.
Money will be, as I said, depreciation that's happening on the price or on the cash that we have stashed somewhere in a bank or in a house or in a safe, whatever. The depreciation that's happening on the currency itself in every single country, because everything is interconnected. Get it?
Yeah.
In every single country makes you think about the 1 million that I'm having from the 80s on the side. If I put it on the 80s on something, this money could have been 6 or 9 or 20 or 30 or 40 million now. Okay? Meanwhile, if I kept it as 1 million inside my pocket, I want to exchange it now. I'm not buying the same things I used to get from the 1980s, right?
No, of course.
Exactly. Like I have a small story I would like to share. Maybe.
Yes, please. Yeah.
When I was young boy, like I was a teenager. came back home with a friend of mine. My friend's dad used to be a pilot in KLM. We're sitting down with my dad. My dad is watching TV. I said, son, would you like to be in future? 13 years old. I said, well, you know, I would like to be a pilot like my friend's dad.
Yeah.
He said, really, that's very interesting. How much money are you gonna make a year from being a pilot? So in my teenager inner head mindset that time, I said, I would love to make $10,000 a month.
That's back then.
That back then, I'm talking about 80s, like what you were thinking.
That's a really good amount of money back then.
Dad looks at me straight in the eyes. He said, so your dream is to make $10,000 a year, like a month, which is about $120,000 a year.
Mm-hmm.
I said, yes, and I'm going to be a millionaire. He said, you will never be a millionaire.
Word of the wise.
He looked me straight in the eye. He said, you will never be a millionaire. He said, after paying taxes, after buying a nice car, after getting a house, you understand? After establishing something for yourself, if you make 20% savings inside your bank from the first paycheck until you retire, you will never be a millionaire.
And back then, 10,000.
And I was like, you know, shocked. He said, son, if you want to make a fortune, there are only 4 ways to make a fortune. The first way is to gamble.
Yeah, okay.
He said, go buy a raffle, get the
Play the lotto,
get the lottery, whatever. By chance, fluke, okay, you might make money, but it's only a small fraction. Mm-hmm. The second way to make money is to marry the money. Find a rich lady, get married to her, automatic. He said, third way is to steal money. You understand? No, that's what he said. Yeah. He said, I don't want to add up, but he said, steal the money, you're still a rich person, you'll make money. Mm-hmm. He said, the fourth way and the most important way is investing the money.
Word of the wise.
He said, investing goes into two parts. First part is to open your own business. There is a running cost, so you have to be ready and well prepared financially to open your own business to support your idea. He said, even if it was the best idea ever, you understand? It's still risky to introduce that idea to newcomers. All these big products that you see right now used to be an idea one day.
Of course.
Right? Some of them, they managed to cross, some of them, they just fell and disappeared.
Yeah.
The second way is to invest on market. That's what my dad told me. He said, look, in the 50s, they used to sell Shell and Chevron and ExxonMobil with peanuts. Get the share. I mean that time.
Yeah.
Get the share and sleep. With time,
let the money
with increasement of the population, with any war ongoing, whatever.
With the demand being
yeah. All the resources on planet Earth are shrinking. They are not increasing.
Mm-hmm.
So basically, eventually, with time, you might be making money. So he was saying the truth.
Absolutely, he said the truth. Word of the wise, man.
Okay.
One last question,
sure.
And we're going to wrap it up.
Always.
Okay.
Thank you.
So, first of all, thank you for coming in. But before we go, if you had to explain trading and investing in one sentence to beginners, how would you go about it? Take your time on this one because it's a tough one.
No, it's ready. It's ready. I'm quoting what I say to myself. It's a key for knowledge, information, and potential change in your financial status.
Very thorough, I would say. It's a key.
It changes your lifestyle, even on personal level. If you sit down with people, you will understand what they are saying related to the market. immediately, if you see a potential war happening, you'll understand that gold might rise or it might. So you'll be more knowledgeable. You understand?
So you don't just stop at one point,
No.
you start expanding, you grow like a fungus.
Exactly.
Fadi, it's a beautiful answer, okay? Fadi, one more time.
Thank
Fadi
you so much.
Haddad. Fadi Haddad, everyone.
Thank you so much.
And I'm sure you enjoyed his answers as much as I did. Once again, thank you for coming in.
The pleasure is mine.
And I'm looking forward to the next one. I hope you will honor me to come in for another podcast. So, this is it for this episode of Market Talks with Neil. Thank you for watching, and I will see you soon on the next one. Till then, give trading a thought if you're not, and if you're trading, keep up with the good work. Thank you much, you guys.
Thank you.
Take care. See you later. Thanks a lot,
Thank
man.
you, sir.